Okay, this is a little thing we call Chart Talk. We're talking with Andrew Keen. He is the president of the company he founded, KeenOnTheMarket.com. And Andrew, well, the week begins with everybody talking still about Facebook, and they're going to be listing their options, which for a lot of people will be another reason to sell.
I definitely agree with you, Bill. I think this is another opportunity for people to sell it. See, what happens is when the options get listed, they're getting listed this morning. What happens is I think a lot of the big banks, retail customers, and funds that are long the stock want to protect themselves against their position. So when they protect themselves, what do? They buy out of the money puts and they sell out of the money calls. When they buy it, the trader on the other side that has to sell the puts and they have to buy calls, thus forcing the trader to sell stock against their position, which I also think will help this pressure go downward. I think it's going to go through this $30 level. This is going to be huge. I think there'll be big volume. We've been averaging about 190 million shares over the course of the last 5 trading days. I think the volume will pick up. I also think the hard to borrow rate, right now it's at about 29%. As more people short the stock, the hard to borrow rate gets higher. So these traders that are now shorting the stock have to borrow it, so the hard to borrow rate will get higher as well.
Well, I'm seeing some people say that it maybe should have been priced around 14. Was this a sucker buy for a lot of people?
I don't know, 14, and it also depends on your time and target. You know, I always say 2 things, time and target. I don't have a position on Facebook right now. On the IPO date, I actually tried to short it at $39.90, and I couldn't short it the first day. Now it is available to short. I did not short it. This $38 level is very interesting to the upside. I don't know if Facebook can ever actually get there. They don't have earnings till the end of July, so this $38 level where Morgan Stanley held the price on the first day, I was watching a trade. It was 38 bid for the world. Any dollar amount, they were covering it. They wanted the stock to end up over 38, but now it's at 32. I think that Morgan Stanley is not doing well on this IPO. They're not being able to hold this price, and when these options get listed, it's going to give more selling pressure. Currently, the low so far of the course of the 5 trading days is 30.00. I think Facebook goes under that, maybe to 28.
Yeah, Morgan Stanley's put a lot of money into this. Is this hurting retail people mostly?
I think it is hurting the retail customers. I think more of hurting them as a dollar amount is putting a bad, sour taste in their mouth. Facebook was the highest hyped IPO in years, and the retail customer gets on the opening print at $38. They were so ecstatic. Now it's $32. So they're not very happy right now. So a dollar amount they're losing, yes, but I think more it puts a sour taste in their mouth because usually a brokerage firm like Morgan Stanley can give them a stock like, because LinkedIn moved so much on the IPO price. If Facebook went to 50 or 60 that day, then the retail customer would be happy. Then Morgan Stanley can now sell them IPOs that aren't so great. They can sell them worse IPOs. Yeah. So it's going to leave a sour taste in the retail customer's mouth.
Andrew Keen, thanks so much.
Thank you.